Well, hello, guys. Welcome and hello and welcome. My name is Danny Deals. You are watching Un Poco Mas, the show where we give you just that little bit more. Thank you for tuning in again today on behalf of Hurricane Lopez and Stock Karen. We would like to say hello and welcome. And guys, once again, unfortunately, due to the economy, my poor investment decisions, unfortunately today I cannot afford a haircut nor a shower, so I am going to be going with this man bun look yet again. I know it is unfortunate, but guys, if you want to hear about the SoFi stock ticker symbol SOFI on this beautiful Thursday, July 19th at 2:17 p.m. out here in beautiful Los Angeles. Market just closed a little over an hour ago. SoFi had a very strong day. I know a lot of people are disappointed the stock isn't going up 10 and 20% per day, but guys, shooting star patterns very rarely hold those gains. 10 and 20% days, unless there's some type of crazy catalyst or change with the company, very rarely stick. The stock being up 28 cents today, or almost 3%, and then another 3 cents after hours. Guys, that's a 30%, or that's a 30-cent gain, or 3% on the day, guys. That's an incredible day. The previous close was $9.57. Stock opened at 9.76. Shot all the way up over $10 twice, and then the algo took hold of the stock right about 12:15. Really started selling and shorting hard, and then basically just traded sideways and slightly up the rest of the day. Heavy buys coming in at the bell, guys. That is a very, very bullish signal. The last candle of the day was like all green and over 700,000 shares traded. So they could not keep the volume as low as they wanted, and they could not keep the stock as low as they wanted, guys. If you take a look at the shorts, shorts were borrowing today, guys. Shorts were not covering coming into earnings. They will manipulate the stock using borrowing and volume no matter what they have to do, because they assume, I think, after the earnings report, no matter how good it is, they're going to be able to attack the stock by bringing out dishonest, shill, short, douche analysts like David Chia from Wedbush, amongst others, people that are willing to humiliate themselves in the interest of their short seller bear masters. I mean, how are you going to throw a $2.50 target price on the SoFi stock after a good earnings report when that represents like 1x next year's sales, and they're growing their margins rapidly, growing EBITDA rapidly, about to be profitable, many, many good things happening with the stock. But if you're an analyst who comes from a good analyst house, but you have a horrible reputation, a horrible track record, what difference does it make, guys? Why would you try to protect a reputation when your reputation and track record is already as bad as it could possibly get? Um, but guys, today we see just another very strong day. You see the SoFi stock just continues almost every single day to make higher highs and higher lows. And that is exactly what you want to see. That's the definition of an uptrend. There is absolutely no let up in the buying pressure, and there is no indication this rally is over. You can have Oppenheimer and all these other D-bags come out to their blue in the face and say, oh, it's overheated. No one wants to buy. It's just crazy. This price at, $9 is crazy. But guys, the SPAC offering price, or, equivalent to an IPO would have been $10. Institutions, insiders were buying above that level. Now we just had the opportunity to buy at $4.50, and the stock has doubled in very short order. Guys, we found that support that I was talking about at $8.13 ish. Now, granted, it did drop below that level a couple of times on these huge gap downs on FUD, but that was pretty much meaningless mechanic work. But for the most part, guys, we held support at 813. We consolidated up to that 891 level, and we have clearly broken out of that. The next place we have to break through is $10. Now, guys, when we get to valuation, a lot of people are saying, oh, the SoFi stock is overheated. It doesn't make sense. It should be valued as a bank. And then Noto came out at the last conference interview at CNBC and explained that even if you value them like Morgan Stanley is telling you to value them, they're still tremendously undervalued. It's like Morgan Stanley can throw out FUD, but they can't do math. Like Noto did the math, and he's like, even if you take everything they're saying at face value, we're still undervalued in relationship to other peers in the sector. And this is backed up today by this article in Seeking Alpha, which basically runs a couple of DCF models on the SoFi stock. And basically, when you run these DCF models, his figures might be slightly optimistic, but he's talking about a value on the low side of $20 right now and a value on the high side of $26 right now, just depending on what data you plug in. But guys, let's take a look at SoFi, the bank of the future. This is by James Ford, investment group leader, July 18, 2023. So this is coming out yesterday at 3:10 a.m. I like an economist who writes in the middle of the night. And guys, just to know who you're talking about, if you look at this guy's reputation on tip ranks, James Charles Ford, he is ranked in the top 2,000 out of 26,000 financial bloggers and about 3,000 out of 34,000 experts. So top 10%, either way you look at it. His success rate is 68%, average return 30%. Copying James Charles Ford's trades since 2019, holding each position 1 year, would result in 68% of your transactions generating a profit with an average return of 30.2%. And guys, you remember what these numbers look like for just take a like take the worst stock, take the worst analyst you could possibly think of, like the biggest piece of shit on the street, the guy who just cares nothing about his reputation. He makes idiotic, insincere calls when the shorts and his masters and the bears tell him to, and he humiliates himself, but he's not, because he's getting paid to do this. So, this guy doesn't want to be right, in my opinion. His job is to be wrong. His job is to spread FUD, kill rallies, pump other stocks. He's not trying to do any type of sober, honest analysis on the stock. He just comes out and does what he's told. If they say, hey, downgrade the SoFi stock and reiterate, 5 different times, that's what he's going to do. You look at his SoFi call, he reiterated $3 just the other day. His success rate is 9% on the SoFi stock, guys. Look at this, 9%. His average return, minus 34.17%. Copying David Chiavarini's trades, holding each position 1 year, would result in 36% of your transactions generating a profit with an average return of minus 8.4%. So again, if you listen to these fake, crooked, dishonest, scam running, short attacking people such as David Chiavarini with Wedbush, in my opinion, he's just a completely dishonest hack. You're going to lose money, guys. You'd be better off throwing darts at a board or pulling stocks directly out of your ass, because this guy's wrong way more than half the time. He's wrong almost 2/3 of the time, which doesn't even seem possible, but somehow the guy makes it happen. So anyway, the guy writing this article is quite good, and his picks tend to work out. So let me hold on 1 second, guys. Sorry about that, guys. Had to take a quick call. Duty calls sometimes. But SoFi, Bank of the Future, James Ford. SoFi Technologies is one of the fastest growing companies in the fintech space. And again, guys, this is on Seeking Alpha. I highly, highly recommend Seeking Alpha. I pay full price for it. I don't have any affiliate links. I don't do any of that stuff. I don't try to sell you guys anything. But Seeking Alpha has some of the best authors, the best minds in the industry, and I think it is well worth the price. That's just my opinion. So if you're going to get authors, one place, analysis, one place, I do like Seeking Alpha quite a bit. Growth and profitability are on the right track. My DCF valuation implies a fair value close to $20. I am James Ford, an economist with a global approach to investing. I lead the investing group, The Pragmatic Investor, where the focus is on building a robust and truly diversified portfolios that will continually preserve and increase wealth. Guys, remember that bearish article we evaluated the other day? The guy was a recording engineer from, he just had absolutely no training in the field. He had no idea what he was talking about. He was just parroting bearish points back from Morgan Stanley and the Chia Pet and people like that. So it's nice to see an actual economist with actual training who, and I've read this article a couple of times. Some of this stuff is a bit over my head because I am not an economist. I did study economics many, many decades ago, but it didn't stick very well. The thesis summary. SoFi Technologies is a revolutionary company operating in the fintech space. The stock has garnered much attention the last few weeks, run up in the stock price. I see a lot of potential for SoFi leveraging its existing client base and turning itself into a banking mammoth. And Noto said, we're going to be top 10 in the financial sector. We're going to be a top 10 company. Guys, look at the market caps of the top 10 companies in the financial sector. They're massive, guys, massive. SoFi provides diversified technological solutions in the finance space and as such has various streams of revenue. Let's break these down. So loan products, investment products, debit and credit cards, insurance products, deposit products. Loans are a big part of the company's business, especially student loans. SoFi has a young client base. They kind of go through and they break down how each segment has been doing over the last 2 years and the last few quarters. I invite you again to click on that. There's a free trial, so if you want to read the article, you can. And click on all these graphics. They're very, very informative. I already have read all the ERs and all these things till I'm absolutely blue in the face. So I have a lot of these numbers almost committed to memory. But student loan originations came down through 2022, have come back up in 2023, slightly so far. But the financial service segment was the second largest revenue source in the last quarter. This includes provision of deposits, credit cards, brokerage accounts. This has been the largest growth segment for the company. We can see it is still operating at a loss. Lastly, we have the financial technology segment, which includes Galileo and Technesis. These are B2B platforms serving other neobanks and a lot of others as well. And they could be serving large brick and mortar leading banks very soon. Remember, Noto said they're in discussions with 12 major clients in the last ER. As we can see, this segment grew fastest rate in 2022, but has moderated in Q1 2023. Now let's look at the top line numbers in terms of interest and non-interest income. And again, guys, I'm not going to go through every graphic and all these numbers, but I invite you to do that. I've already gone through them. As we can see, net interest income has grown at 102%. 3-year combined annual growth rate, while non-interest income has grown at 50% combined annual growth rate. So non-interest income is growing about half the rate of interest income. And that just makes sense, guys. Interest rates have been very, very high. SoFi is making a ton of personal loans. The defaults have been very, very low. So that leads to just a ton of net interest income. Now let's see how this translates in terms of adjusted EBITDA and net income. SoFi has quickly moved from barely breaking even to making over $75 million in adjusted EBITDA by Q1 2023. Profitability has been increasing at a very fast click, which is great to see. This was perhaps one of the most standout notes from the latest quarterly report. We delivered another record quarter of financial results, generated our 8th consecutive quarter of record adjusted net revenue, which was up 43% year over year. We also generated our 3rd consecutive quarter of record adjusted EBITDA at $76 million, representing a 48% incremental EBITDA margin and 16% margin overall, as well as a 54% incremental GAAP net income margin. Why I like SoFi? Here's what I really like about this company. In the last few quarters, we've seen concrete evidence of how the company can grow and greatly increase its profitability. In the 3rd quarter 2022, SoFi spent almost $115 million on sales and marketing, which generated 377K new memberships. It adds up to a customer acquisition cost $305 per customer. In Q4, SoFi invested around $130 million in sales and marketing and brought in 523,000 new memberships. So the acquisition cost was $248, which is $57 lower than the previous number. With that said, it went back up to $404 in Q1 2023. So they were really spending to gain those members, which is not a great sign. I'm fine to admit that. But I think overall, the growth story is still very, very much intact. And it's harder. They have to spend more when it's not in football season. They're, the stadium investment is not paying off. It certainly pays off more in the second half of the year. As we can see from the chart above, SoFi users tend to start by opening a brokerage account or a CD, and then they slowly move into other products and even taking loans, which is the highest margin activity for SoFi. Granted, we have been and continue to be in a tough environment for financial stocks, but this is why I believe SoFi's revenues could explode once the environment for credit is more favorable. With that said, the other thing I like about SoFi and what obviously is attracting a lot of investors is the high growth rate. Despite the harsh environment, SoFi has been posting steadily across the board. And guys, that's what's really critical to remember is they have been growing like this in extremely challenging conditions. We have not seen SoFi with its bank charter, with all its new businesses, actually in a positive business environment. And what this guy's saying is when we actually do see what this company can do, it's going to basically blow your depends right out of your oversized grandpa underpants. Products added, members added. You guys know all these numbers. Lending and financial services. You can see the financial services product 51% growth year on year to 7.1 million. That is outstanding. Lending products 24% year over year to 1.4 million, which is also very, very good. Also, we can see when we break down lending and financial services products. Furthermore, we can actually see very strong quarter over quarter growth, showing an acceleration from previous quarters. SoFi is performing very well and leaving traditional banks in the dust. A recent study by Cornerstone Advisors found that fintech plays are absolutely dominating the market in terms of new accounts. Guys, look at the change from 2020, 2021, 2022 to 2023. Digital banks have seen their share of new accounts just in that time go from 36% to 47%, while mega banks went from 24 to 17, regional 27 to 21. Community banks actually grew slightly from 5 to 6%. Credit unions were basically flat at 7 to 6%. But it's basically very clear to see here, guys. Mega banks lost 7% of market share. Regional banks lost 6% of market share. And all that growth came right here to digital bank fintech, guys, with an 11% increase and like 1 or 2% on these others. But mostly all the growth in new accounts was open. All the growth went to digital banks and fintechs, and SoFi has been absolutely killing that. In 2020, SoFi accounted for 1% of new account openings, and Wells Fargo's share was 8%. In the first half of 2023, SoFi's market share quadrupled to 4%, while Wells Fargo's share dropped by more than half to 3.5%. So, guys, it is what it is. SoFi is absolutely kicking ass, and Wells Fargo is just shitting the bed. Consumers have made up their minds, and it is clear in their trends. SoFi is popular among young generations of today, which will be the big spenders tomorrow. Moving forward, the company is guided toward 30% revenue growth in 2023 and 14% adjusted EBITDA margin, showing a continued increase in profitability. This model assumes that the company could reach $6.7 billion in revenues by 2028 with net income of $1.15 billion. This implies SoFi can slowly increase its net margin to 17% and continue to grow at a combined annual growth rate of 25% over the next 5 years. The revenue growth seems to be a bit more optimistic than what analysts expect. And management is more in line with this guy, and I trust management. They almost always beat their numbers. Consensus has SoFi reaching $4.31 billion by 2027, which applying another 27% growth would have us at $5.5 billion by 2028, a bit below this estimate. Net income of $1.152 billion would imply, given no dilution, earnings per share 1.2. Also a bit optimistic based on analyst consensus. With that said, I think the profitability potential is underestimated, and so do I. And so does Noto, and so does LaPointe, though those people actually know the numbers. Financial companies average around 20% net income margin, and I'd expect a company like SoFi to be able to reach this, if not more. And they will do more because they don't have branches, they don't have the overhead, they're far more efficient than these dinosaur legacy companies. In any case, even if we adjust the DCF valuation, SoFi should be worth, in my opinion, at least $20, which is twice the current price. Looking at the SoFi chart, we have already run quite a bit, and why it might not why might not get another great spot to add from a short-term perspective. I believe we are close to completing wave 3, which should take the stock into the $12 to $14 range. Of course, my price target is $13.75 at profitability, or right now actually. Following this, we might see a retracement in wave 4 that will take us back to these levels. If we do break below recent lows, then we can see that we're a very strong volume support back at 6, and I'd be very surprised if we went this low. Guys, we're not going back to 6. I don't think we're going back under 813, period. The 200-day moving average and the downward trend line should provide support well before that. This is only an initial 5-wave impulse off what I'd consider to be the start of a much larger trend. SoFi has a lot of room to run to the upside over the next decade. While SoFi, there are a few things to consider: political risk, Joe Biden, student loans, all this stuff. Final thoughts: SoFi is a fast-growing company with strong fundamentals. While it is hard to value, I think it should be worth at least $20 as of today and will be worth a lot more into the future. And don't forget, guys, SoFi ran up to like 24 bucks 3 times. It's not like we haven't been in that territory. Like, oh, that's crazy. That's crazy. That means the stock will double. Well, guys, this thing's been artificially killed by shorts and market makers. This has not been organic price action to take this stock down into the fours repeatedly. It's an absurd valuation given their growth, profit margins, etc., in my opinion. SoFi is a fast-growing company with strong fundamentals. While it's hard to value, I think it should be worth at least $20 today and will be worth a lot more in the future. Until proven otherwise, it seems like SoFi is a consumer favorite, executing well in terms of growth and profitability. So, guys, there you have it. Discounted DCF model, not discounted DCF model. That's repetitive. Discounted cash flow model. This guy's real number is 26 bucks. What he thinks the stock is worth today. He's using more analyst numbers, more conservative numbers, putting the stock value with the DCF model around $20. My current price target is $13.75, but I think once we reach profitability and show that we're not going back, stock's worth $20 all day long. And I think we'll see that we could see that within the next year or so. Remember, guys, the stock just doubled in a couple of months, and I believe firmly that it could double again within the next 1 year, perhaps 2 years. But, if the economy keeps going strong and interest rates stop going up, you're going to have more student loan opportunity. The lending business is already doing extremely well. The technology side is growing quickly, or has been. Hit a little bit of a hiccup last quarter, but let's see where we are with that. Let's see if we don't hear some new clients coming out with earnings. I know they can't announce every client because they don't want their name on it saying, we're powered by SoFi or anything like that. It's not that kind of situation. These B2B contracts, but it'll become very obvious if SoFi lands a big fish. It'll just become pretty obvious who it is. People will be able to figure that out by the fact they're using the tech stack, the code, all that stuff. Smarter folks than myself can figure all that out pretty easily. But guys, this is the SoFi stock. The ticker symbol is SOFI. My name is Danny Deals. The show is Un Poco Mas. The date is July 19. The time is 2:41 p.m. out here in beautiful Los Angeles. Let's get a check of the aftermarket again. Looks like we might be down just a little bit. Yeah, just down 1 penny, guys. So up 27 cents so far on the day. A couple of hours left in the aftermarket. Guys, what's going to happen as we get up toward earnings? That's the real question. People want to get out their crystal balls and shine them up and just look into the future, see what Madame Zelda has for us today. My opinion, what's going to happen, guys, is the stock is going to continue to move up into earnings. I just feel that the stock going into earnings is going to be, well above the $10 level. We've been in basically, in my opinion, a very, very clear uptrend since the middle of May. Basically, this stock has not gone down in any natural pattern since the middle of May. And I don't see this uptrend going away. We had a huge downtrend, huge consolidation period for like 14, 15 months. And then the chart is basically repeating itself. We did an analysis the other day basically showing how this works, but the stock is going up basically the same way it came down, and this happens a lot with charting. But if you look at this other side of the boat, guys, the stock was all the way up here at 23 bucks. So we're still under 10, guys. We're still under the IPO price. We're still under basically water from where I believe the stock should be and where Mr. Fjord believes the stock should be. And clearly, um, his track record is consistently better than mine, but I've done very, very well on the SoFi stock this year. The thing was just, I just bought the hell out of it down the fours. I knew it. I knew what was going to happen here, and I knew that Noto had everything on track. So, guys, coming into earnings, I expect us to be somewhere 1050, 1060. That's my opinion. Right in this level, probably where these two lines are going to go ahead and cross sometime next week. Will the stock continue to be shorted? Yes. I don't even these idiots might attack the stock after the ER, but it's going to get more and more difficult, guys, because when we're making net profit, institutions are going to come into the stock. The short thesis is very thin. It's very thin now, but it gets even thinner when we're making net profit and things are hitting on all cylinders. Guys, SoFi is going to be an absolute monster in terms of free cash flow. I'd highly recommend you read this analysis that came out yesterday in Seeking Alpha by James Ford, who is the investing group leader at the Pragmatic Investor. Excellent article. All the math is there, guys. People always say, like, bulls, they're just too optimistic. You're ridiculous. You're talking about a bank. You're assigning all these values that banks don't have. Guys, these are numbers. These are models. And even if you use the more conservative numbers from the analysts, the stock is still tremendously undervalued, guys. The SoFi stock is going up. Shorts are trapped and screwed. Noto has them exactly where he wants them. And you listen to Noto being interviewed, he's in full command of the numbers. He explains why Morgan Stanley is absolutely wrong and why companies like Wedbush and JP Morgan just completely missed the boat. You look at a stupid son of a bitch like David Chiavarini from Wedbush, who is just a, complete hack scam artist, in my opinion. He doesn't try to give an honest valuation of the company. He's just serving shorts and bears to kill the stock and attack the stock with shorts whenever they tell him to. So, guys, you say, you know, you tell David Chiavarini to downgrade the stock and then reiterate the downgrade 5 or 6 times. He's like, well, I'm going to look like a complete fool and a complete asshole. And his boss is like, David, you already are a complete fool and a complete asshole. Look at your track record. It's the worst. It couldn't be any worse. I mean, how could this guy be a worse analyst? He's already number 8,300 out of 8,500. He's like in the bottom, He's just an absolute sack of shit. But guys, I digress. It's the SoFi stock. It's down 2 cents after hours, holding on to 26 cents of gains on the day. Volume was fairly average, almost 50 million shares. The shorts came at the stock again really hard today, trying to keep it down. Obviously, Upstart was going crazy again. Affirm was up like 3.5%. Even Lucid, that turd sandwich was up, but Upstart's really leading the charge. PayPal down a little bit. The credit cards were flat, but this is very, very bullish, guys, because out of the 48 million shares churned, a net of 3 million were borrowed. So that's putting a lot of selling pressure onto the stock that wouldn't have otherwise been there. And it still went up 3%, guys. So it doesn't get any more bullish than that. The chart looks extremely bullish, expecting good earnings, expecting to be in the 1050, 1060 range when that report comes out. And depending on what it is, guys, the shorts may attack, but I don't think they have the minerals. I think we go up from there past 12 and then challenge my target price of $13.75. Guys, tell me what you think down in the comments. What is SoFi's stock price going to be doing up until the ER? What's it going to be doing after the ER? What is the ER going to show us? What's it going to tell us? If there are going to be any big surprises in terms of growth, either positive or negative, what do you think those surprises will look like, guys? My name is Danny Deals. It's un poco mas. Thanks a lot for watching. I will talk at you guys again tomorrow. It's the SoFi stock, ticker symbol SOFI. Un poco mas. Get out of here. Get out of here.